Good morning, friends. Welcome to Gurukul CEC live lecture series. I am Dr. Divya Verma, Associate Professor in Guru Gobind Singh Indraprasth University, Delhi. And we are right now studying a series on FinTech. So today's topic of discussion is payment and settlement systems in India. Payment system is the base of the economic system of any nation. It helps us understand about basic functioning of day-to-day technology in banking. This topic of payment system will form a base of understanding, and you'll understand the relevance and growth of FinTech in India in terms of its suitability, adaptability, and how this new technology is coming up and solving a lot of problems of the system. And all those people who want to start a FinTech business will find today's discussion useful in terms of after understanding the payment and settlement system. We all know that in this economic world, everything is done through the flow of money goes through the banking system, and when we deposit money in a bank, or when we withdraw money from a bank, or when we take a loan from a bank, so there is a transaction which is happening. Before this, the transactions, how this payment and settlement system has evolved. So all the human transactions will be a component of, will be treated as a part of the payment and settlement system. Initially, when human beings were evolving, we used to have barter system, where humans used to exchange goods and services for other goods and services. After that, money was introduced, so people used notes, currencies to coins to settle their trades. Then the banking systems in the countries were established, which help people to make payment and transfer money through bank accounts and checks, and they become very popular. So after that, we realized that so in India we have central bank, that is RBI, whose role is to govern the flow of money and the flow of credit in the economy. They also oversight the payment system, and they have a board of regulation and supervision of payment and settlement system, which is chaired by the governor of RBI, and who share this responsibility of making and regulating the payment and settlement system in the country. After that, in 2005, RBI created a new department known as Department of Payment and Settlement System, DPSS, and then the Payment and Settlement System Act 2007 was established. It set the stage for a new era in the history of payment systems in the country. Now, what is an efficient payment system? An efficient payment system will promote market efficiency and reduce the cost of exchanging goods and services. By the same token, its failure can result in loss of confidence in the financial system and the very use of money. So, having a good payment system, having a payment system which ensures that right money get transferred to the right people and the transaction gets completed without any loss of time, without any loss of money, without any frauds happening around. So that will determine the success or efficiency of any payment system. And now we all understand the world has become global, and we also understand that technology has taken over the banking system and the other systems which the payment and settlement system as well. So we have come a long way in this journey. But this all started with the establishment of Payment and Settlement System Act 2007. A sound and appropriate legal framework is necessary requirement for any efficient payment system to work, which includes laws, standards, procedures for payment system. India is one of the few countries that has specific payment system law, which defines to provide for the regulation and supervision of payment systems in India and to designate RBI as the authority for the purpose and for matters connected therewith or incidental thereto. So there are payment system operators. So RBI has authorized various payment system operators such as CCIL, which is a financial market infrastructure central counterparty, so for settling the trades. NPCI, it is for retail payment, it's a retail payment organization. Then there are card payment networks, there are cross-border inbound money transfer entities, ATM networks exist, there are PPI issuers, instant money transfer operators are there is TREDS platform providers, Then we have Bharat Bill Payment Operating Units to operate payment system in the country. Now, if we talk about the components of payment and settlement system, so right now I think you all must have understood about that, in the banking system where we are dealing with money, and for any transaction when we are paying the other party in money. So sometimes we pay physical cash, sometimes we pay a check, many a times we do online transactions. So nowadays you use UPI or you use Paytm or other such online platforms to transfer money, or RTGS or NEFT. So all that is what payment system is all about. So we'll reach on to a level where we understand that how this technology driven payment system is operating, because that becomes the base of the fintech industry, that becomes the base of the success of the banking industry. So there are a lot of issues and challenges in the payment system, and how we have been evolving in this payment system. So overall we need to understand, if you look at from the finance expert perspective, so we do need to understand that how does this banking system operates, and how does these payment system is operating in the economy, and how electronic payments are getting transferred, what are the main agencies, what are the components, who are the drivers, and how we have been growing in that. So there's Bank of International Settlement, BIS Committee on Payment and Market Infrastructure. They have defined payment system transactions to include the total transactions undertaken by payment system in a country. If we consider this definition, payment system transactions in India would comprise of transactions processed and settled through paper clearing, that is MICR, non-MICR, check truncation system, express check clearing system, bulk electronic transaction processing systems like electronic clearing services ECS and its variants, which includes regional ECS, national ECS, then national automated clearing house, debit and credit both. Then we have card payments, like we have debit card, credit card, electronic. We have RTGS transactions, that is real time gross settlement transactions, retail net electronic fund transfers, that is NEFT, very popularly we are using it these days. IMPS for making fast payments, we have UPI, then we have e-money, which includes prepaid payment instruments, cards, wallets, all of these exist. If we look at the journey of India's payment systems, since 2010, there were very few instruments which were available, like it was just NEFT, RTGS, some cards were available, MICR transactions used to happen. So there were very few payment system available. But in 2020, if we look at the number of payment systems and processes which are available, they are too many. So RTGS, NEFT, IMPS, UPI, and then we have RuPay card, we have other type of cards, we have toll payments apps which are available. Then we have Bharat Bill Payment System for all the routine payments to be made. So for the IMPS and UPI services, if you look at, they are available for consumers round the clock for undertaking fund transfers. Then we have Bharat Bill Payment System, which has also led and made all our life so easy. So there are PPIs to facilitate payments of bills and purchase of goods and services. Then we have National Electronic Toll Collection to facilitate electronic toll payments when we go to a toll. So automatically, payment is being made to the toll. So if we see the growth and development of this payment system, how much was the contribution of online and offline paper-based payment system and retail electronic payment system which exist. So in 2010-11, if we look at, it was 60% was paper-based payment system which was existing. So it was physical currency which was being transacted, and now in 2020, if we look at the total retail, the 60% of the total payment which was paper-based in 2010 has now reduced to just 3%. So 61% of the payments are now electronic. So that is what we can say, where we have reached as an economy, as a financial system, and what needs to be worked upon. So looking at the size and quantum of the payment system which has become electronic, We need to look at that there are no frauds. We need to look at there is more convenience to the customer rights, and things are protected. So all of these things need to be ensured. In the last decade, we have seen consumers have multiple payment options to choose. And in this approach towards payment system development in the country, safety and security have been the two most important things kept in mind by RBI, followed by efficiency, accessibility, affordability and convenience. Payment systems have always been regarded as a public good and an ancillary activity of banks which can be leveraged as a base to provide various other services. So success of the whole fintech industry, success of all the online businesses, e-commerce businesses which exist, is based on this payment system which has now become electronic. So that is the relevance of this particular topic and subject and understanding of this. For having this robust payment system which we have governed by RBI in India, there's a lot of institutional building that has gone in the background. So initially RBI had this Institute of Development and Research in Banking Technology. It was established in 1996 to bring technology in payment systems. It developed the Indian Financial Network, InfiNet, the Structured Financial Messaging System, SFMS, and Indian Banking Community Cloud, IBCC, and then National Financial Switch. So this Institute of Development and Research in Banking Technology, the Indian Financial Technology and Allied Services, IFTAS, was created with the mandate to provide critical infrastructure services to RBI, banks, cooperative societies and other financial institutions. IFTAS was providing some of these services which include InfiNet, the communication backbone of the Indian banking and financial sector, SFMS, which was a robust messaging platform used by RBI and operated payment systems like for RTGS messages, NEFT, BCC. A specialized community cloud was existing and in the banking and the financial sector. Global interchange of financial transactions, GIFT, was a one-stop integrated payment and settlement system providing an end-to-end straight-through processing of payment messages between the source bank and the destination through the central bank. Another important institution is Clearing Corporation of India Limited. CCIL is a financial market infrastructure established in 2001, authorized by RBI under the PSS Act to operate various payment systems and functions as a trade repository for specified instruments. So CCIL therefore is authorized to operate in following payment system, which includes securities, which also includes outright repo, tri-party repos. It also includes forex in all kind of US INR transactions and cross-country transactions, forex forward contracts like between USD and INR, rupee derivatives and forward rate agreements are also a part of this. Then we have secondary market trades in certificate of deposit, commercial papers, market repos, reverse repo transactions in corporate bonds, certificate of deposit, commercial papers, all of these are a part of this. Primary market issuance, commercial papers by respective paying agents are also included. What were the enablers of this online or electronic payment system which is surviving or which is existing right now, and where we have the level we have reached in the fintech industry? So it is, a lot of it is success goes to the telecom and the internet subscribers in the country. So how many, if you look at this chart, you can see from 2012 to 2020, so there has been an increase in the wireless based telecom subscribers, so mobile subscribers basically. There's a huge increase. And then broadband subscribers who use internet over wireless or on the wired system, you can see how there's a sudden jump in this the broadband subscriber level from 2013 to 2020. So this data definitely shows that how much people have become internet savvy. So as people become more and more internet savvy, they look at those options and those processes which are available, which are electronic. So thus National Payment Corporation of India was established. In 2008, RBI established NPCI as a not-for-profit company, where now number of shareholders of NPCI is 67. So these shareholders includes public sector banks, 18 private sector banks, 5 foreign banks, 10 cooperative banks, 7 regional rural banks, 4 small finance banks and 2 payments banks, and 10 PSUs. So they all are a part of NPCI as a shareholder, and definitely NPCI is performing a very important role in establishing and understanding of the payment system in the country, with the objective of optimally using the resources through consolidation of existing infrastructure and building new infrastructure to enable national reach in a seamless manner. It envisaged constituting an umbrella organization to have a robust technology platform and provide service of high quality to customers at an affordable price structure. So NPCI was entrusted with the task of operating CTS on behalf of RBI. So later on, IDRBT in December 2009 was taken over by NPCI, and the task of managing NFS, National Financial Switch, which operated an ATM network having 37 members with 50,000 ATMs. Now this network has grown of 112 member banks connecting over 2.3 lakh ATMs in 2020. So these two activities are the main revenue source of NPCI, if you look at these trends, of which have been able to expand their operations and invest in innovative ideas and systems. So if we look at since establishment since 2008, the progress made by NPCI, so they have got NFS, then they have IMPS, then UPI, later on it was, so all other instruments which exist, so all of them are now in the kitty of NPCI. So they are all governed by NPCI. So with the aim of touching lives of every Indian, NPCI has rolled out a variety of retail products. For example, IMPS, RuPay card, UPI, NACH for Aadhaar enabled payment system, Aadhaar payment bridge system, and BBPS. Further, NPCI alliance with international network partners like Discover Financial Services, Japan Credit Bureau, China Union Pay. They all have paved the way for international acceptance of our RuPay card. So widespread adoption of NPCI's retail payment products has made NPCI truly an umbrella organization for retail payment systems. So NPCI as a retail payment product also have provided an impetus to RBI's vision of cashless society. And now you see, after demonetization, we have actually become the cashless economy is improving and increasing. And that is where the boost of digital payment system had come after 2016 with the this demonetization action. So NPCI has yet been another successful experiment and experience in the Indian payment system. NPCI International Payment Limited was established in April 2020. NPIL is tasked with the responsibility of exporting in constitution and coordination with RBI. NPCI is indigenously developed offering to the foreign markets. Now looking at the standards and identifiers, so we have Indian Financial Network, InfiNet. In order to upgrade the country's payment and settlement system, RBI had taken initiatives for providing communication backbone in the form of satellite-based InfiNet, using VSAT technology to the banking and financial sector. The task of designing and developing the communication network was entrusted earlier with IDRBT. Then we have closed user group network which uses VSAT technology and a time division multiplexing and time division multiple access network with star topology for data and with demand assigned multiple access single channel per carrier, overlay with mesh topology for voice and video traffic. Then an important identifier is Structured Financial Messaging System, SFMS, which was also developed by IDRBT as a domestic messaging standard used for financial messaging in India. SFMS is an electronic data interchange for banks, and it uses InfiNet as a communication medium. Various interbank applications uses FMS to improve efficiency and speed in fund transfers. MIS reports, information reports. SFMS is also the universal platform for carrying messages pertaining to central payment systems, thus meeting the requirement of both retail and large value fund transfers. The basic architecture of SFMS is 4-tiered with hub connected to bank gateways, which are connected to bank servers. Bank servers in turn are connected to offline branches. The SFMS messages from a bank branch to another bank branch will be delivered via bank gateway and the hub. Interbank messages are, however, switched at a bank gateway level and are not required to be routed to the hub. Then an important and very popular one is IFSC code, that is Indian Financial System Code, which is an 11-digit alphanumeric code which you usually find, which is a unique identifier for a bank branch. Also, it is available on the checkbook to find out what is your IFSC code, and so if you know somebody's account number and IFSC code, you can transfer him money immediately. This IFSC code includes first 4 digits representing the bank, fifth character is 0, and the last 6 digits represent the specific branch code. The IFSC is mandatory for fund transfer through various payment systems like RTGS, NEFT, IMPS, as it helps to identify destination of the beneficiary bank and branch. So, since the implementation of core banking system by banks with all branches connected to centralized system, RBI now allocates only the primary IFSC representing bank code, and banks can create, modify, delete additional IFSC for their own branches through IFTAS, and these updates are circulated by IFTAS to all member banks to ensure the same reflects in their systems. ISO 2022. So ISO 20022 is a multi-part international standard prepared by ISO Technical Committee, TC 68 Financial Services. So ISO 20022 is an emerging global and open standard for payment messaging. It creates a common language and model for payment data across the globe. India's RTGS was the first large value payment system in the world to be implementing and adopting ISO 20022 standard for messaging. Then we have SWIFT code, which is used for international transactions. Society for Worldwide Interbank Financial Communication. SWIFT is world's leading provider of secure financial messaging services. SWIFT has become industry standards for syntax in financial messages. Messages formatted to SWIFT standards are read and processed by many financial processing systems, whether the message traveled over to SWIFT network or not. SWIFT standards have been used across the globe for domestic and international financial messaging services. So we'll stop here, and then we have right now understood the journey of India's payment and settlement system from barter system, how we have come to the paper-based payment system wherein checks, currencies and coins are transacted, but now we have also shifted to, after 2010, we have shifted to the electronic payment system. So that's all for now, and we'll come back soon with this topic on payment and settlement system. Thank you so much.